Right now at 4:30, a North Carolina bank coming to the rescue in one of the largest bank failures in decades. First Citizens Bank, based in Raleigh, strikes a deal to acquire Silicon Valley Bank, hoping to stabilize the banking industry after that recent collapse. All 17 branches of SVB opened today under the name of First Citizens after the $72 billion acquisition was cleared over the weekend. That acquisition is another step in reassuring investors at a time of shaken confidence in banks. It also follows the FDIC trying to prevent a bigger banking crisis by guaranteeing SVB customers access to all of their money despite the $250,000 federally insured limit. So let's go ahead and bring in economics reporter for the Hill, Toby Burns. Thanks so much for joining us.
Thank you. Thanks for having me.
Of course. All right. So what exactly does it mean when a bank like First Citizens in Raleigh, for example, acquires a failed one like SVB?
Right. So we saw these big bank failures earlier this month send some shockwaves out through the financial sector, and there was a lending facility that was brought together by the Federal Reserve and the Treasury and the FDIC to basically bail this Silicon Valley Bank out. And so there were bridge banks. Basically, those executives were fired, the banks were shut, the depositors were insured. And those bridge banks, the assets and deposits that were insured, are basically now sold to another bank to take them over and to administer them from here. And that bank is North Carolina-based First Citizens. So First Citizens will get about $56 billion in deposits and about $72 billion in assets. And they're getting that at a discount now because of the failures, and that discount is about $16.5 billion. So these were bridge banks that were set up because those banks failed, and now a private sector bank is basically buying the remains of those to shore up confidence and to basically expand its business. This move puts First Citizens in the top 25 largest banks in the country, but those are the basic mechanics of the move.
Well, and when we see these headlines with SVB and other banks that are collapsing, what does that mean for the economy and the everyday person who sees this? Is this going to impact someone who wants to take a loan out in the next couple of months? How does it impact us?
Yeah, so the Federal Reserve has said that credit conditions are tightening as a result of all of their regulatory moves recently. And frankly, this is, it's not a good situation, and everybody knows this. We don't like to see bank collapses and bank failures because they can, seriously destabilize the economy. It brings back memories of 2008, where basically the federal government came in and, just totally bailed out the banking sector with new legislation and a whole new program called TARP. That was, they since paid many of those loans back, but those send major shockwaves throughout the global financial system. And some Federal Reserve bankers have actually said this week that this increases the likelihood of a recession this year. So yeah, it is a worrying situation, and it's also a worrying situation not just for the banking industry but for taxpayers, more importantly, because taxpayers are called upon to backstop these lines of credit that are extended by the Federal Reserve to the banking industry, and that puts public money at risk, and it's not something that we want to see. Now, there are arguments on both sides of that it's good for the system to be shored up and to be backed up with taxpayers, and there are arguments, in the other direction as well. But it's important to know that there is definitely a public element to what's happening here.
It's always a very delicate balancing act there. Economics reporter for The Hill, Toby Burns, thanks so much.